All right, good morning, everyone. Welcome to today's webinar. I am Tyler Bollhorn from Stockscores. Hopefully you can all hear me okay. So what is the itinerary for today? First, we're going to describe what is a winning stock, and then I will talk about the sort of clues that hot stocks leave. Sorry, I just have to keep getting these pop-up messages that saying the webinar is full, and I have to turn that off. I think we're good now. All right. So how to find winning stocks, the 6 things. What is a winning stock? I'll describe what I mean by that. I'll show you some of the clues that hot stocks leave. And then I will teach you the 6 things that you must know to analyze any market, any stock, any commodity, any cryptocurrency, real estate, doesn't matter. Anything that you can put a chart of pricing to, you can use these 6 things to predict the future. We'll do a little lesson how I find opportunities in stocks. We'll specifically use my website, stockscores.com, and I will talk a little bit about how to learn more about my approach, some of the webinars that we have coming up next week, some of the courses that I have coming up in November. And then we're going to do a little search for opportunity. And then at the end, I will take your stock questions. So if you own a stock and you want my feedback or my analysis of it, I will do my best to do that. Now we've got, as I said, a full webinar today, so I won't be able to get to everyone's question because we are really packed in here, but I'll do my best to at least give you some examples of how we look at things. All right, so what is a winning stock? Very simply, one that moves up faster than the market. And in finance, they call that alpha. So alpha stocks are those that move faster than the market. If the overall market goes up 10% in a year and your stock goes up 20%, then you have an alpha stock. And as traders, investors, we are trying to find alpha stocks. Now you can do that with day trading, with swing trading, with position trading. Position trading is probably what most of you will do, where you buy a stock and hold it for a few months. But some of you may have an interest in day trading as well. And I'll talk about that on Thursday in that webinar if you want to get more into that shorter term day or swing trading. But not only do we want them to move up faster than the market, but they need to trend. You know, it has to be a situation where they're going up day after day after day. You know, if a stock makes a 1-day jump from $2 to $4, it's really not possible to take advantage of that. That sort of thing does happen when companies get bought out. They'll, go from a certain price and then the next day they gap up to a price that's 60% higher. That's not really what we're talking about here. We're talking about those stocks that consistently are trending higher faster than the market. Now, the other thing that we want is we want to avoid stocks that have significant pullbacks. You know, those pullbacks emotionally are difficult to ride out, and they will often make us sell a good stock preemptively. So if a stock is, goes up from $1 to $2 and then all of a sudden pulls back to $1 one day and then starts going up again, we don't want that kind of volatility. We want stocks that are more consistent to the upside. Now, these hot stocks or these alpha stocks, they leave clues. And very simply, and this is the first of the 6 things that you must understand, and something that I spoke about on the radio show today, is that over 90% of winning stocks start their upward trends with abnormal activity. Over 90% of winning stocks start their upward trends with abnormal activity. I'm going to show you lots of examples today. But when I talk about abnormal activity, what I mean is that they make a strong price jump with higher than normal volume. So if a stock is trading at $10 and it some days goes up 30 cents and some days goes down 20 cents, that would be its normal trading. But if one day it goes from $10 to $11, that is fairly significant jump, right? And that would be what we consider an abnormal jump. If it normally trades 1 million shares a day on a typical day, and then one day trades 2 million shares, that would be abnormal volume. And when we look at some charts and the examples that I'll show you in a moment, that'll become more apparent. We'll just sort of run through the theory first, and then we'll get into some of the examples. The next thing is we must qualify stocks because not all abnormal activity leads to market-beating trends. So we have to look at the charts of those stocks, and if they are trading abnormally, but they don't have the right patterns or the right characteristics, then we still want to avoid them. So not all abnormal activity is important, is I guess what I'm saying. And that's where the other 5 things come in. And that's why it's important to go through these 5 with you today so that you understand how those all work together. So let's look at some examples. And these are the examples I'm going to use to teach you today. I've got a couple or 3 examples, and some are on the Canadian market, some are on the US market. And what we're looking for is that abnormal activity. So just as an initial clue, we've got abnormal activity here, some abnormal volume in here. And obviously this stock did very well, but notice that at the start of its upward trend, and you could argue that it started right about there, you started to see the abnormal volume and the abnormal price activity. Now, if you've been to my website, stockscores.com, you will know that we have something called the stock score. And the stock score helps us find these things. And you can see that the stock score spiked there as well. Moving along, if we look at another example, this is a US listed stock that's done quite well lately. But again, here it's not really doing much. The upward trend starts on this day, and notice that price activity is abnormal, and so too is the volume relative to what it had normally traded. And again, the stock scores spike higher. We will do some work with my tools later in the webinar, and you'll understand a little bit more about how that is helpful. But in the simplest case, the stock goes from $4.50 to it closed on Friday at $11. That's the kind of market-beating action we're talking about here. It's not normal. It is certainly outperforming the overall market. Now, we can also do this on what we call an intraday time frame. So if you look at this chart, notice up in the top left here, it says it's a 15-day, 60-minute chart. That means each one of these bars represents an hour of trading, and this is 15 days, okay? And on the 8th of October, it started to behave abnormally at $9.50, and by Friday, it was at 15 and change. So it's a pretty significant rally over a very short time period. But what I want everyone to notice at this point is that it started with abnormal activity, abnormal volume, abnormal price action. Now, we'll get into the tools that we use to find these things in a moment. So what are the 6 things that you must understand? Well, the first one is what we've spoken about so far, and that is abnormal activity. So abnormal price move and abnormal volume. But the other 5 are what I'm going to teach you with the charts in just a moment. The first thing we talk about is price volatility. How much is price changing over time? Second is optimism. Are the buyers in control of the market? Or in the case of pessimism, are the sellers in control of the market? And then we have concepts that are pretty familiar with those who have looked at stock charts in the past, and those are support and resistance. And I'll show you all this stuff on a chart because it makes a lot more sense when we do it visually. All right, so here's that first example that we had. And let's now go through those 5 things. So we knew that abnormal activity was occurring here, for example. We had abnormal volume and abnormal price movement. Well, where is the price volatility element? So when we talk about price volatility, we're talking about how much is price changing over time. If you've got a stock that's going sideways, like it did there, you have low price volatility. If you contrast that with this period, where you have high price volatility. So we have high here, because there's lots of movement, it's moving up. Sometimes you can have high volatility to the downside, like you had right here as well. Both of those are high price volatility. This is low price volatility. Here you had low price volatility. And there's a number of periods when we had low price volatility. Essentially, if you want to really get simple, it means that the stock is going sideways in price. Now, for those of you that aren't familiar with stock charts, let me give you a quick lesson on what we're looking at here. The upper chart is price, how much price has changed over time. So our time is going from left to right, and our price is on the vertical, low price down here and higher prices up here. So what we can see then is in May, the stock was trading at about $1 a share, just below $1 a share. And it traded at about 80 cents a share for most of May. But more recently, since August, the stock has been moving higher. started moving up early in August and has gone from 80 cents to where it closed on Friday around 270. Actually closed at 272, and you can see that price up here. What we call this chart is called a candlestick chart. They look like little candles. This is the price. This is the volume here. So this is how many shares traded. So on Friday, this stock traded a little over 4 million shares. And then the bottom chart is the Stockscore indicator, which we use for longer term trading. We don't use it for day trading or for swing trading. It's meant for the analysis of the daily chart. Now, I am recording this video or this webinar, so if you find things are going by too quickly, you will get a link to a video later so that you can watch it and sort of replay some of these things if they're if they're going by too fast. All right, so we understand price volatility now. We know that when price is going sideways, we have low volatility. Now let's talk about optimism and pessimism. And this is really simple if you start by identifying all of the peaks and the valleys on the chart. So the peaks are the little tops and the valleys are the little bottoms. So anywhere price sort of bottoms out, we have a valley, and anywhere it tops out, we have a peak. I call these inflection points. It's the point where price changes direction. So price was going up, it stops going up, and it goes down for a few days. All right, and we call that an inflection point. And we can identify all the little peaks and valleys fairly simply. Just look for the pointy parts on the chart is a simple way to do it. Now, here's how you read whether there's optimism or pessimism. If you have falling tops, so if the peaks are falling from left to right, you have pessimism. So at that period, from May until August, we had pessimism on the stock. If you've got rising bottoms, then you have optimism. So anytime there are bottoms that are rising from left to right, you have optimism. Now, what we want to do as traders and investors is not fight against the mood of the market. You do not want to be a buyer of pessimism. You want to be a buyer when pessimism turns into optimism. So for example, here we were in pessimism, and then we switched to optimism. And early in that switch is when we should be interested in buying. And the reason is this. Think about trading and investing as sort of a metaphor or comparable to paddling a canoe on a river. You can paddle with the current or you can paddle against the current. What would you rather do? Unless you really want a good workout, you are always going to choose to paddle with the current because it is that much easier. And it's the same in the market. We want to understand what is the current, what is the mood of the market on any stock or the market in general. All you have to do to determine that is look at whether there are rising bottoms or falling tops. Here we have falling tops, here we have rising bottoms. This is the period when we want to consider buying, and this is the period when we want to avoid the stock. All right, so that's optimism and pessimism. Now, the final thing that we're going to think about relates back to the inflection points that we talked about already, where we have these inflection point highs, and we can draw lots of them on here. So all the little peaks, well, we can draw a line across those, and we can refer to that as resistance. It is a ceiling price. So here we have a downward trend line of resistance. The market was moving down, and every time it came up to the trend line, it got stuck and kept on going lower. And we also have a horizontal line of resistance. Now let's think about what that line means, because it does have some important meaning. So this price point here, this price point right here at $1 represents the maximum amount that investors had been willing to pay for the stock for the last number of months, up until the third week of August. So up until the third week of August, investors were not willing to pay more than $1 per share for this stock. And every time it got up to $1, it got stuck. And it got stuck again here. So that is why we call it resistance. It's a ceiling on the price of the stock. Now we also have floors. And again, just pick out your inflection point lows and you can draw a line across them. That is support or a floor price. And what that represents is the minimum price that investors were willing to sell the stock for over a period of time. And we can see that there's always moving lines of support and resistance, and all you have to do is just draw horizontal lines at the inflection points. And we're going to use that for selling later. That's why it's important. Now we can also draw a trend line across the floors to define the upward trend. So we have downward trends across inflection point highs, and we have upward trends across the inflection point lows. Ceilings and floors, kind of like snakes and ladders. When you break through one, you can make the run to the next level. All right, so we've now gone through all six. We have abnormal activity, we have optimism and pessimism, we have resistance, and we have support. You now know everything that you need to know to pick a winning stock. We combine them. We're going to buy a stock when we have a breakthrough resistance with abnormal activity from low volatility from optimism. So I'll say that again. If we have optimism and we have a breakthrough resistance from low volatility with abnormal activity, we have a reason to buy. Now let's think about it in terms of how this stock performed. Now we're going to get into another concept where we do our risk management. Okay, this is one of the most important concepts and yet is so often missed by investors. We know now that our buy signal was right here because that was the day we were breaking through this line of resistance from optimism, from low volatility with abnormal activity. Notice that on that day, the Stockscores spiked higher. Our blue line needs to be above 80. It hit 98 that day. Our green line needs to be above 60. I can't tell the exact number, but it was definitely above 60 that day. So we've got everything lined up in that third week of August. The question now is, how many shares do we buy? Where do we, or how do we manage our risk? All right, we're going to buy the stock right. Oops. Sorry, I moved my mouse there. Here we go. We're going to buy the stock right here at, looks like about $1.05. And we're going to plan to lose if we fall down below this floor at about 75 cents. Just for the sake of simplicity, we'll call it $1.05 entry price and support at 75 cents. So the risk on this trade is 30 cents a share. Right? We're buying at $1.05 and we're going to plan to lose if the stock goes down to 75 cents. The difference between those two numbers is 30 cents. That means for every 1,000 shares we buy, our risk is $300. So now, how many shares do you buy? You buy the number of shares for the risk tolerance that you have. If you are willing to lose on any one trade $150, you're going to buy 500 shares. If you're willing to lose $600, then you're going to buy 2,000 shares. So this is the basics of my risk management technique that I teach in the classes that I do. And of course, we get more in depth than this, but this is the basic idea. Now then, let's say we took $300 of risk on this trade. We bought 1,000 shares at $1.10. Currently, the stock is at $2.75. So we are making $1.70 per share times 1,000 shares. So we are making $1,700 of profit on $300 of risk. That means our risk reward ratio is about 5 and 5.6. We are making over 5 times our risk. And that's another metric that we use. And this is something I will get into the webinars that are coming up next week. We'll talk a little bit more about reward for risk and that sort of thing. All right, so we understand our 6 things. We understand risk management. Let's look at a couple more examples. So everyone look at this stock and try to pick the approximate date when it met the rules that I just described to you. And that is breaking through resistance with abnormal activity from optimism from low volatility. I'll give you 5 seconds and then I'm going to show you. All right, well, there you have abnormal activity breaking through resistance from optimism from low volatility. Check mark, stock scores good, check mark. It's all there, everything we want. At $4.50, support price down there at about $3.25. And in terms of reward for risk multiples, it's up 1, 2, 3, 4, 5. So it's making 5 times its risk. That means if you risked $100, you're making $500 on that trade. $200 of risk, you're making $1,000 on that trade. Another example, this is a short-term trade now. So when we talk on Thursday, I'm going to talk about day trading and swing trading. With day trading and swing trading, we take the same concept. We just look during the day for our entry signals. So for those of you that want to make a living trading the stock market, you're going to look at intraday charts. And I can teach you how to make a living at the stock market. That'll be the topic of Thursday's webinar. But here again, abnormal volume, abnormal price, optimism, resistance, low volatility. Simple, right? It is simple, except you need some powerful tools and methodology to find these things in time. Because finding it up here, that's not good. You're too late. You got to catch it when they just start to move. And that's what I've built, is tools to find these things. So how do you find opportunities in stocks? It is easy with hindsight, but hindsight doesn't make you money. I've just shown you 3 examples from the last few weeks. They're pretty obvious, they're pretty simple, but if you didn't find them in time, then it's absolutely no good to you. So to profit, we need powerful tools to find them before it is too late. And there's 2 tools that I use. The one that I'm going to show you today is the Stockscores market scan tool. This is for longer term trading, something we call position trading. For those of you that want to day trade, make a living trading the stock market, I recommend using something called TradeStation. And I have special indicators that I've created for TradeStation to do the things that I do, because they're not common. The things that we've talked about today are not tools typically found in most charting programs. And so one of the things that I will do on Thursday is I will show you TradeStation, how it works, and the things that I have built for TradeStation that you can use as well if you choose to be one of my students. We're not going to get there today. Today we're going to focus on the Stockscores market scan tool. So let's jump over to Stockscores now. And I need to log in as myself. I'm logged in as somebody else, not sure why. So let me just log in here. And now to use this tool, you have to be a member of Stockscores. To be a member requires you having completed one of my courses. I'll talk about the courses in a moment. We're going to jump to the market scan. And the first thing I'm going to do is just do a little scan on the Canadian market to look at some of the winners of the last little while, so we can see if these things that I've taught you so far today actually hold. So we're going to do a scan for all Canadian stocks. And we're going to slide down here and we're going to look for stocks that are up at least, 50% in the last 60 days on the Canadian exchange. And just so that we don't get stocks that are too illiquid, I'm going to require that the stock trade at least 500 times on Friday. All right, so we're going to run this market scan. It went through every stock that is listed on the Canadian exchanges, and it very quickly found the 17 stocks that satisfied my filter requirements, namely on the Canadian exchanges, up at least 50% in the last 60 days. Now you can apply that to the US exchanges as well. We cover all North American markets. All right, so let's click on go so that we can take a look at some of these charts, and let's just see if these stocks started to behave abnormally early in their upward trend. Well, there you can see abnormal action, boring sideways trading, but there was optimism. That stock's made a really big jump. It's a real penny stock, not a very liquid stock. I'm not sure that I would trade that, but some people like to trade those. Let's take a look at this one. All right, take a look and see if you can see when the stock did what I've taught you to look for. How about right here? You've got optimism breaking through resistance with abnormal activity, and up it went. We'll do a few more, and then we're going to actually go searching for them together. So here is Birchcliff Energy. This one started with its abnormal move right here, abnormal volume price, or sorry, abnormal volume was a little higher than any day for about 6 weeks. Wasn't as clean a pattern as I'd like to see, so let's take a look at one that maybe has a better pattern. Here's a great one. So here you can see very obviously spike in volume, spike in price, through resistance, from optimism, from low volatility. That's at $1. It hit $3 a couple of weeks ago, and now it's at $2.25. So you can see that the method works. Now let's actually see how you look for them. So we have preset market scans in this tool so that you don't have to know how to set up all these filters. Now, as a member of Stockscores, you're welcome to set up these filters however you like. You can see there's lots of them. But I recognize that not everyone wants to do that. So I have built for you preset market scans that look for different strategies. If we go into here and go to abnormal breaks US, for example, it's going to scan the entire market, and it found 43 stocks that meet the requirements of that strategy. Now, this particular strategy looks for stocks that are trading abnormally. That's why it's called abnormal breaks. My job now is to look through the charts of those stocks to see if they have the right kind of chart pattern. So I can just cycle through these, and what I'm looking for is what I've taught you to see: abnormal activity from optimism, from low price volatility. So everyone take a look at this. Notice on Friday, it traded big volume, and it had a price jump that stands out. It broke through some resistance, and it has rising bottoms, and it has low volatility. Is this a good one? Well, remember I said today we're just going to cover the basics. There's some other things that we have to think about. And one of those things is past areas of resistance. Notice that there's a ceiling price right here. And notice that during the day on Friday, it went through that ceiling, but then it ended up closing here. I don't know if you have to know a little bit about stock charting to know what that is, but this is where the stock closed on Friday. It wasn't able to break through this ceiling. And so for that reason, although I like it for many reasons, I would give this one a 6 out of 10. And that means I think it has a 60% chance of going higher. I personally prefer stocks that have a 70% chance of going higher, so I would probably pass on that one. Here's another stock. It had some abnormal price movement on Friday. You can see that there. The volume isn't really obvious, so that worries me a bit. And again, it's got this resistance level right here at $1 that it seems to have a little bit of trouble getting through. It's tried a couple of days and failed. So it's pretty good. I would give this one a 6.5 out of 10. I think it's got a 65% chance of moving up. So that's the process, is you do the scan, you look for what I've taught you to look for. We've touched on some of those things today. And when you see a good one, then you do your risk management, figure out your share position size and all that kind of stuff. Here's Hertz, HTZ. So all of the car rental companies on Friday had a pretty good day. Not sure what the reason was. Don't really care what the reason was, but you can see the trading action was very abnormal. Hertz traded 1 billion shares on Friday, and it had a price jump. Is it a good setup? Well, again, it's got resistance in this levels here. So from a reward for risk standpoint, I don't love it. I think it's good, not great. 6 out of 10. Now, you can get to the point where you can rate these things as well. You just have to know what to look for. And those are some of the things that I teach. All right, so the webinar is coming up next week. I just want to check the dates just to make sure I got these dates right, because I have a feeling I might have set the webinar for Wednesday and Tuesday, not Tuesday, Wednesday, sorry. It is Tuesday and Wednesday next week, not Tuesday and Thursday. Someone pointed out that there is no Thursday webinar, and you're correct. So there's the dates. Jump back into here. This should be the 21st, Wednesday. My apologies. So Tuesday, we're going to do a webinar on how to invest in the stock market profitably. On Wednesday, we will do a webinar on how to day trade the stock market profitably. And then next Saturday, 1 week from today, we will do an overview of the different course options that we have. I'll give you a brief overview today, but I know that not everyone wants to sit through the in-depth part of that. So the longer presentation on my courses, the different training options that I have, that'll be next weekend on Saturday. And all of these webinars are free. To register, you just go to the Stockscores website, go to Trader Training, down to upcoming events, click on that, and you get this list here, and you can register for any and all of them. Now notice at the bottom, there's one here. This is not a free webinar. This is a service that I offer called my mentorship program. And you have to be an active trader student to do this. So, I mean, you could become an active trader student today and then go to the mentorship program. But that is a 14 class program that we'll do. I'll talk about that in a little more detail next weekend and shortly go into some of those details as well. So how can you learn my approach? Let's say you want to get into the deeper stuff. We've talked about the basics today. If you want to actually learn my strategies, the processes, I teach a small number of people each year. And those people are then able to use my tools. So the market scan tool, TradeStation, which we haven't talked about today, we'll do that on Wednesday. Those are the tools that you can use if you are one of my students. Now, because I don't teach a lot of people, I primarily teach people in Western Canada because that's where I'm from. I mean, we have students all over the world, but I don't market myself a lot because I don't want a lot of students. It becomes too much work. And it also, I think, takes away the opportunity if you have too many people doing it. So we keep our numbers low. And what the course options are, there's two. Well, there's actually three. There is the investor course. So the investor course is for people that want to position trade the market, like we've been focused on today, where you buy a stock and you hold it for a few weeks, months. Doesn't take a lot of time, 5 minutes a day, 15 minutes on the weekend, that sort of thing. That's what the investor course is all about. You will learn my investor strategies. You will have access to my market scan tool, which I've shown you today. You get email support from me, directly from me. I don't have other people answering my email for me. And with that course, you get 6 months access to the market scan tool, which you can then renew at $300 per year. You cannot access the market scan unless you have done at least this course. Now, the other option is the active trader course. And this is what we will focus on Wednesday's webinar, where we will talk about day trading and swing trading. You get access to my theory, which is called the foundation. You get access to the investor strategies, access to my day trading strategies, swing trading strategies. We call that the active trader section. You get access to the market scan tool, email support from me, renewable at $300 a year. Everything's kind of the same. But you also get my real-time indicators for TradeStation. So for those of you that want to make a career out of trading the stock market, maybe whether it's part-time, 1 or 2 days a week, or full-time, maybe you can't go to work because of COVID and you want to make a career out of trading the stock market, this is the course for you. I will teach you what I do and give you all of the tools necessary to do what I do. Now, another element that we have on Stockscores is something called Active Live, where every day you can watch my analysis screen and listen to my opening and closing comments for the day to tell you what to do that day. I talk for the first half an hour of the day and the last half an hour. And then during the day, you're watching I have algorithms that run all day long. Again, we'll talk about this on Wednesday, but the Active Trader course makes you eligible for that product. Active Live, again, you're watching me create and monitor the market for day trades through the day. Real time, it's live, it's automated. The signals are all computer driven. It's really quite an amazing system. Again, I'll show that on Wednesday. So if you want to do this, again, we'll go into the details next Saturday, but quickly, the training starts November 3rd. Our first online class, which will be a live class like today, we do 2 hour-and-a-half sessions, one on Tuesday, November 3rd, the second on Thursday, November 5th. During those classes, I take you through the theory, and then we talk about strategies the following week. We're going to do actual market scans together, Monday, Wednesday, and Thursday. We'll just try to pick some stocks together, an hour each night, taking you through what you've learned the previous week. So it's your application of what you've learned. If you do the Active Trader course, then you also get a free month of my Active Live service, where you can, again, watch my screen through the day and listen to my commentary in the opening and final 30 minutes. Now, there is a special offer because I do this cycle of teaching twice a year, and coming up is when I'm doing my fall cycle. So anyone that registers for the Investor or Active Trader course before Friday, October 30th at 11 p.m. Pacific time will receive those overview classes November 3rd and November 5th, as well as the strategy application series the following week, Monday, Wednesday, Thursday. You get those for free. So it's a $390 value. You're getting that included. Plus, for those that do the Active Trader course, you also get a free month of my Active Trader service. Now, I haven't talked a lot today about the mentorship program. This is restricted to 20 students, and I will just walk you through the material 1 hour a week. You get an assignment every week. You do log into a webinar every Tuesday night. We do a webinar for about an hour, and I'm going to walk you through step by step. It's primarily focused at more active trading. So for those that want to make a career out of day trading or want to be a swing trader working an hour a day perhaps, that's what the mentorship is focused on. Now, it's limited to 20 students. You have to first purchase the Active Trader course. Once you've done that, then you can immediately sign up for the mentorship course. And it's currently half full. I've got 10 people already registered. So it's now got 10 spots open. And again, those are some of the things we'll talk about later in the week. So if you want to learn my investor course, it is $2,495 Canadian dollars. If you want to do the Active Trader course, which does include the investor course, it's $3,495. And again, Canadian dollars. The mentorship course includes the Active Trader, includes the investor. That is $54.95. Many of my students who did the Active Trader course last year want to upgrade to the mentorship. And so that's what you pay is $2,000 upgrade fee. If you want to move from investor to Active Trader, that is a $1,250 upgrade fee. And you can do that from the Stockscores Education Center. So all of the training is online. I mean, we're going to do some live training in November as well, but all of the course material is online, and I will be showing this next Saturday, but I'll just give you a quick sense of what it is. You've got written lessons, you've got videos. These are the actual investor strategies. Our theory is right here. So all of these topics are covered, the things that you need to know. You're looking at about 10 to 15 hours of work to get through the course material. I'm there to support you as you go through it all, and of course, answer your questions as need be. But in November, we're going to complement this online material with some extra classes, which will be recorded as videos so that you can watch them over and over if you so desire. So how to register for the course? Again, you just go to that address there, stockscores.com/learn, or you can just go to the website, go to Trader Training, learn how to trade, and the sign up is all on this page, as well as some videos and extra information about the courses. That's all right there as well. The deadline, if you want to get that bonus live training, is October 30th, which is a Friday, again at 11 p.m. And once you're registered, you get immediate access. You can start your learning right away. The more you can do before the actual live classes in November, the better. So the sooner you sign up, the more time you will have to work through the material, and then you'll get that much more out of those live classes. Now, what I want to do now is just run a quick little poll just to see. I don't like to bug people with marketing. I'm not that style of business person where I'm going to send you a bunch of emails that you don't want. So if anyone would like an email with a little bit more information on the upcoming courses, just answer this. And if you don't want it, you won't get an email. So I'll leave this up for, 30 seconds or so. And then next thing we're going to do is look at some stock picks. And if you have some stock questions, you can send those up as well. And again, I'll leave this up for another little bit. Now, if you're watching today's webinar in the video because you couldn't get into the webinar, and again, my apologies. It filled up very quickly. I mean, it's nice to be popular, but I wish I could have gotten everyone in. Anyway, if you missed it and you do want an update, what I recommend is either taking in the webinars on Tuesday and Wednesday, because I'll put the same poll up then, or just fire me an email, tylerb@stockscores.com. I'll put that up in a moment, and you can get on my list so that you'll get my email updates. All right, so leave this up for another 10 seconds, and then I'm going to shut it down. 5, 4, 3, 2, 1. Close that down. Thank you everyone for answering. That helps us get information to the right people who want it. All right, so now let's take a look at, one other thing. I do have a YouTube channel, and I put up a video every week. It's free. So if you're not currently subscribed to my YouTube channel, I recommend you do that. Again, every week I put up my analysis of the markets, try to teach something. It's great free education. So go to youtube.com, search for Stockscores, and just subscribe to the channel, and maybe click on the notifications bell, and then you will get updates as well. All right, so let's take your stock questions now. I promised I would look at some stocks for you. I'll take general questions as well. I've got lots of questions coming in. I'm not going to be able to get to them all, but I will try to at least touch on a few. So the first stock question that I see is on PPL on the Canadian exchange. So for Canadian markets, we have to put a prefix. So that's on the Toronto exchange. So we're going to type in a T dot and then PPL. That's Pembina Pipeline. I'm never sure how to pronounce it. So let's analyze this together. First of all, optimism or pessimism. Well, we've got falling tops, so we have pessimism. And we are nearing support. If we break down through that support, that would be a negative. So to me, this is a stock right now to avoid, because I don't like to buy pessimism. I like to avoid pessimism. And if it breaks down through $28, I think it could even fall farther. So to me, right now, this is a stock to avoid. Next up is Bank of Montreal. We'll take a look at the U.S. listing. It also trades on the Canadian exchange, but here's the U.S. listing. They basically look the same, except the prices are in U.S. dollars here. I think this is an okay hold. I wouldn't buy it, but it's got rising bottoms, so we have optimism. We're kind of stuck in this sideways range, which really mirrors the range of the overall market. We've been sort of stuck in the sideways range since the end of August. I like the stock generally longer term because it did make a breakout here from optimism with some good action, and it's managed to hold above support. So it's a valid hold. I'd give it, a 5.5, 6 out of 10 right now. All right, next up, we'll look at a couple of U.S. stocks. One is Apple, AAPL. So Apple, who's in control, buyers or sellers? Well, we had rising bottoms here for a long time. It actually went parabolic, where the trend got really steep. And we broke that parabolic trend there early in September. So to me, that was a sell signal. Now it's starting to build rising bottoms again. It made a little break there. I think that was on Monday ahead of their Apple event. I think it's a good hold if you own it. I don't see a reason to buy it here, but if you own it, I would stick with it. Let's try, what's another one here? Tesla, TSLA, another hot US listed stock. And let's take a look at this on the 3-year time frame, because we can, of course, look longer term as well and apply what I taught you on the long-term time frame as well. So everyone ponder this stock and look for the week. This is a weekly chart. This goes back 3 years. Look for the week when this stock did what we talked about today, namely an abnormal break from sideways trading from optimism. So what happened here in October, a year ago, of 2019. See the spike in volume that week? Stock scores were good. Price break from low volatility from optimism. So the market told us to buy Tesla at, $70 a share. Now it's at $450. Now it went up really quick, gave a sell signal there, and then it gave another buy signal here on the break of the pullback. And since that time, it has been in a nice upward trend. It has not broken the upward trend yet. Now, a few weeks ago, it got a little ahead of itself, was way up here, and I suggested at that time it was probably a sell because it was likely to pull back to its upward trend line. That's one of the rules that I'll teach in the course on how to know when to sell some of these things. When stocks run away from their trend line, so like they did here or here, they usually pull back to the trend line. And you can see here we had about a 4-week pullback, and here we had a 2-week pullback until it hit the trend line again. So those are some of the techniques you can use to move in and out of the stock. If you are in Tesla, I think it's a hold. I would not buy it here, but it is a hold. All right, let's take a look at Canadian stock here. How about, there was a bunch of them. XBC on the Venture. So this would be a more speculative stock because it's on the TSX Venture, XBC. And I like this. If you're in it, I would hold it. It broke through resistance. We talked about resistance there. And it had a little bit of optimism. little bit of low volatility. I mean, it's a bit choppy in that range. What it lacked was abnormal volume. You don't really see the volume coming in. So although it's broken out through that, it's still kind of missing something. Now, when I see a chart that misses something, I'll usually take a look at it in the longer term. So let's click on the little 3Y, which gives us a 3-year chart. And now I say, you know what? I'm not interested in buying the stock now because it feels like I'm coming to the party too late. It's a good hold. Stock has good upward momentum. It's got rising bottoms, no reason to sell. But it really started its move back here with some volume and back here with a breakout through resistance from Optimism with some volume there as well. So to me, if you bought this at 2, that was a thumbs up, way to go. But now it's a hold, not a buy. All right, let's try VEEV on the New York Stock Exchange. And then I think I'll just take some general questions. If you have any, you can pull those up or type those in now. I'll try to answer some of those. VEEV is a good hold. One of the things I often say is you don't want to buy a stock that's on a hill, right? This is a hill. You want to buy stocks that break from a solid foundation, so sideways trading. So back here, when it was breaking from this sideways trading, that was good. Up here, I don't want to be a buyer. It's still a hold because it's still in its upward trend. It hasn't given a sell signal yet. One of the things we look for is a break of a trend line from a falling top. Well, that hasn't happened here yet. And so generally, I would say this is a hold, not a buy. So someone asking, does your method utilize options? You certainly can. Many of my students will trade the option instead of the stock. So, for example, Tesla, $400 and something in share price. You may not want to put out that amount of capital to trade Tesla. So take your buy signals from the charts using my method, but then use an option to trade it. And what I generally recommend is an in-the-money call option because you get generally the best correlation to what the overall or what the stock itself will do. You don't want deep out of the money options because they have a lot of time value in the premium, and that can dissipate a lot. Those of you that trade options will know a little bit about that. So, but yeah, certainly you can use options with my approach as well. So someone asking, do you enter your positions in a tiered method? I mean, 25% and then add if you have confirmation. You can. I don't personally do that. We do something called scaling, where we will add to a winner every time you have a new entry signal. But generally, I like to buy my position fully at the start and then only add if it's working. Those, again, are topics that we cover in the material, that I cover in the material. That's one of the topics of the foundation section, is called scaling into a position. So I do talk about that as well. Now, in terms of sell signals, what we want to look for are breaks of upward trends from falling tops. So I want to think of a stock that maybe, let's look at some oil stocks because they, of course, have been pretty brutal for a long time. And I'm going to try to see if on a 3-year chart I can find one. Here we go. So one sell signal occurred. This is ExxonMobil. And one negative signal happened right here when we broke down through a floor from pessimism, from low volatility. So that was a very strong sell signal. In fact, a signal to short sell the stock. And that, of course, occurred at, $62 a share. Now it's at 35. So you can make money from stocks going lower. You can do that long term like this one. You can do it short term with a day trade. And I do teach some of those things in the market as well. Now, I have a few questions about what's my outlook on the overall market, on the oil sector, that sort of thing. That's what I cover in my Market Minutes video. So go to YouTube, search for Stockscores, and watch my videos. They're up every Sunday morning typically. So I'm going to actually do that video today after I do this webinar. It will be uploaded either tonight or tomorrow morning. And then you'll get the full analysis of the overall market, what I think about gold, what I think about US stocks, Canadian stocks, oil. It's all there every week, plus a lesson on how to be a better investor, better trader. And best of all, Price is Right, it's free. So just go to Stockscore or go to YouTube, search for Stockscores, and make sure you subscribe to the channel. The more subscribers I get, the more I want to upload videos. All right. I think I'm going to wrap it up there. I know I've missed tons of questions because there have been so many, but I will take questions again on Tuesday and Wednesday at those webinars. And again, to register for those, just go to Trader Training, upcoming events, and you can register there. How to invest in the stock market on Tuesday, how to day trade the stock market on Wednesday, and I'll go a little bit more in depth with my tools. We're also going to search for some stocks. Maybe we'll find some stocks that you can trade and hopefully make some money on. And then, of course, on Saturday next week, I will do an overview of the courses if you have an interest in that. So I want to thank you all very much for joining me today. If you are watching this as a video because you couldn't get into the webinar, my apologies, but there's a limit on the size of the webinar, and we just got fully booked up before I started. So, next Tuesday and Wednesday, try to log in a bit earlier, and hopefully that'll get you in on time. Thank you very much. Thank you very much, everyone, for joining me today. I did record this as a video, so it will be uploaded to YouTube soon, probably later today if you want to watch it again. And have a great weekend, and I will hopefully see you on Tuesday. Bye for now.